Hi, I'm Steve. I'm going to share my thoughts on how you can achieve a better financial future. Please remember, I don't know anything about your situation, so think for yourself and use what fits. Welcome back to our conversation about the 7 secrets of successful investors. The 5th success tip is to invest some of your money outside the U.S. International markets comprise almost 2/3 of the global stock market's value and contain some of the fastest growing markets and companies. For the benefits of diversification and broader selection, invest some of your money in mutual funds or ETFs that focus overseas. The next secret is to be smart about fees. Fees are corrosive to long-term returns. Before you pay the fees, shop around like you would for anything else and make sure you're getting good value. Looking at this chart, you can see how paying an extra 1% per year will eat up 1/3 of your earnings over 40 years. A 1% fee doesn't sound like a lot, but over time, it will really clobber your results. I believe index-based mutual funds are one of the most efficient investment tools known to man. An example of paying a little bit extra for good value is a mutual fund or ETF that buys stocks outside of the U.S. Understanding these markets is often hard, and executing transactions can be tricky. On the other hand, a sales fee or load or high annual fee on a fund that doesn't beat a comparable index is probably just picking your pocket. And finally, number 7, remember to adjust your investments as your need for the money gets closer. This could be retirement or college tuition, for example. As you get within a few years of needing the money, begin to move some of it to lower risk investments like CDs or bonds. A common strategy is to keep 2 years of withdrawals in these low risk areas. This will reduce your chance of having to sell stocks when the market is down. Let's wrap this one up. Get in the game and invest early and often. Spread your bets across many companies and geographies via low-cost mutual funds or ETFs. An easy starting point is an S&P 500 fund. Select investments based on when you'll need the money, and most importantly, don't get jumpy. Let time and diversification do the work for you. Well, that's it for this session. Thanks for watching, and I'll see you next time.